TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning. Happy Thursday out there, everybody in Radio Land. You're from 7,000 feet. It kind of reminding me a little bit of California with this weather we're having these days. We're having some overcast mornings, and then it kind of gets a little sunny and hot again in the afternoon. I mean, that's, if you're familiar with coastal California weather, you know how you get that a lot in the summer with that morning haze that then burns off as the day wears on. That's where that term June gloom comes from. And it's kind of funny because I notice Californians tend to use that term June gloom, not necessarily realizing that in other parts of the country it doesn't have that kind of meaning. And it might be a bit mysterious. Well, why is June gloomy? June's a very nice month. You have Father's Day, you have graduation. What's wrong with that? No, it's a weather condition in Southern California, coastal California, really. And that's where it comes from. But we're having some of that today here, a little June gloom in August. But it does look like it's starting to burn off. Okay, we had this morning fourth straight negative reading on the Philly Fed. But it was less negative than last month. You know, just yesterday, there was a whole lot of chatter about econ data showing a turnaround. You know, I'm a little bit skeptical here. We're seeing housing data, builder sentiment improving. I'm seeing right where I live, right down the street, I can tell you there are a number of construction projects getting underway here, some that are picking up again after being dormant for several months. So I'm seeing it right in front of me, and I got to tell you, I live in this crazy town where there is no industry to speak of other than government, state government, some federal. That's the biggest industry around here by far. Then you've got retail and such, but obviously there are not a whole lot of the jobs of the level in retail, other than perhaps some store management, that type of thing. But there are not really a lot of jobs in retail that are going to enable you to purchase a house. Let's just be honest about that. Now, I'm seeing it, though. I'm seeing the housing picking up here, a lot of groundbreaking going on. You know, I don't know. We'll see. The employers on a nationwide basis, I'm seeing the surveys all the time. They're saying they don't want to hire because of the threats of crushing regulation. In other words, anti-business sentiment from Washington. So if there are no jobs, who's buying the houses? I don't know. So that's some of the econ data that we are seeing out there this morning. And we are seeing, let's see, I put up a chart there in front of you of the IWM, being the small cap show here. I like to kind of start out with the Russell 2000 ETF. So we're seeing a little boost in that one right there this morning. Okay, so in IPO land, let's just show you what we've got going on. We did have a fairly high-profile IPO that made its debut this morning, and there you have big old daily chart for HCLP, which is High Crush Petroleum. Actually, no, High Crush Partners. That makes more sense. Yeah, that makes more sense. High Crush Partners, HCLP, priced at 17, opened at 17.11, and 17 was actually below the proposed range. Let's see, the company was hoping to debut between 19 and 21. So this is a fracking company, produces frack sand, and of course that is being impacted by the drought, just the water that's needed in that in that process. Let's see here. They priced 11.25 million shares. You had Barclays, Morgan Stanley, Credit Suisse, and UBS were the chief underwriters on this. So that's out there today. And let's just see, just for fun, I'm going to, in a moment here, I'll take a look at where it was last priced. When I'm showing right here, okay, 17.99 most recently. So, okay, so, and again, don't forget what we do see on these opening days of trade. You do see the underwriters, the institutional buyers that are out there propping up the shares, these big institutions, to maintain the value above the IPO price. So you do see that happening. Of course, just for fun, why don't we go over to the most infamous IPO that is trading today. There's news here on Facebook. Just put a chart up there for you. So today what we have, we talked about this a little bit in Tuesday's show. We have the lockup expiring, which is enabling quite a bit of insider selling. Now, these are, again, institutions. These are not employees. What we have in October, we have the employees will be eligible to begin selling some shares. And, of course, the reason for these employee share options is to retain employees, to keep them motivated. So we'll see how all of that shakes out here. But nonetheless, we are at about $20 right now on Facebook. I believe it fell earlier today. It fell to $19.69 was the low, intraday low thus far today. Let me just double check that. Yeah, it fell to $19.69 earlier in the session. So, not looking good here. Not looking good here at this juncture. Again, remains to be seen going forward in the coming years, coming months, what happens here. Whole lot of talk about how mobile is really going to end up as something of a disappointment to the advertisers because users are not as engaged with some of these ads the way you might be if you're accessing Facebook from a desktop. I mean, I understand that myself. I do, because I don't really click too much on some of these paid ads that are over there on the right-hand side. Every once in a while I might do that. However, if you're on a mobile device, no. What I'm going to be doing is just posting a photo, posting a status update, just something very quick that has nothing to do with clicking on the ad, seeing the ad. So I can understand how that could be a bit of a problem going forward. Let's see here. I wanted to talk a little bit more about some other IPO news out there. I have a little interesting story this morning. By the way, take a look at the homepage of TFNN.com. We have our IPO report, 7 recent IPOs that could be ready for some big gains. You're seeing some of these actually that are moving right now. This is more of a report that we are looking at with more of a longer-term perspective, not necessarily something that we're talking about. These are poised to move today necessarily, but could be something that you might want to be tracking over the longer term. Recent IPOs are often among some of the market's best price performers and also are showing you some of that good earnings growth that you want to see in a leading company driven by revenue growth. So that's why a lot of these really can be some big winners. You have an energetic management team. You have some fresh ideas. You have customers still coming into the company for their products and services, regardless of the sector. Okay, so it doesn't have to be one of these kind of high-profile techs. It does remain amusing to me. You do get just let's have some fun. Let's just take a look at some of these names that everybody loves to talk about because they find them so interesting. Zynga. Yeah, I don't know. I found the whole Farmville Mafia Wars thing pretty annoying. but this was a very hyped IPO. You see where this is. Let's see, what's the other one now that, I talked about this the other day. Groupon. Yeah, I mean, I subscribe to them. I'll tell you my experience with Groupon, and I think this is fairly typical. I bought a couple deals, and then the day I was going to go use one, I had people at my house, and we were getting ready to go out to this restaurant to use the Groupon deal. The site wouldn't load. I couldn't print the coupon. The restaurant has since closed. It's reopened under new management. This was about a year ago. And then I had another one that I just forgot to use. And you know what? Forget it. It just, I don't care. I just don't care. They have some interesting ones. I saw one that came across yesterday that I'm not sure it's still on or not, but it was pretty interesting. It was animal rescue. And if you've listened to my show, you kind of, that's an area that's near and dear to my heart. That's where I do a lot of my volunteer community work. Is in animal rescue. I've got a couple kittens from the Santa Fe Animal Shelter that I'm fostering right now. They're adorable. And I work with dogs mostly, but I have a couple kittens right now that are downstairs and I'm fostering. So I saw a deal on Groupon to buy an animal rescue kind of thing. You donate $10 and someone will free a chained dog, and not free, but build them a fenced-in yard, that kind of thing. They were raising money for that. So I thought that was pretty interesting. So that is something that you're seeing there, but the stock nonetheless a dud right now. And I just don't see this. It's they're online coupons. I mean, big deal. It's not like coupons are hard to come by, not like sales are hard to come by. There may be something here that they can tweak that business model, but, is this the kind of thing that should have been a publicly traded company? Maybe not. Is it 1999 all over again with Pets.com? I think not on such a mass scale, but you still see a little bit. People, even Wall Street investors, the Wall Street community loves these high-profile consumer internet plays. They love them. So there's definitely some emotion connected with some of that. Let me see here. I'm reading in the Tiger Den, Ken from Philly. Yeah, so Ken, you did the same thing I did. You forgot about it. And it's interesting because when I did it, when I forgot about the one I had actually met the woman. I mean, Santa Fe is a small town. I ran into the woman who owned the restaurant, who had the deal. I'm not even sure she's still open anymore. A nice woman, also involved in animal rescue. I should support her restaurant. I just never got around to it. So, it's not really surprising to me. I'm seeing the trends that are going on here with Groupon, with some of these consumer internet plays. There's just more hype than reality with a lot of these companies. So we're going to come back. I want to talk about another company that filed for an IPO. I'm Kate Stalter. This is the Small Cap Roundup. Be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right. Welcome back. This is the Small Cap Roundup. Just want to give you a little reminder here. We are still offering the Low Price Leaders newsletter at its introductory rate. So go to the homepage of TFNN.com and you can get a free trial. You can get in on that. Tell you, we've got a couple of trades on that have done very well. You might have gotten a little promotional email about that. If not, if you're not on the list, by all means, go to TFNN.com. Take your free trial. We just entered into a new trade yesterday. Now, one of the things that I am always very careful to do is managing the risk. Okay, so that's a big piece of this methodology. You will get stop losses and trailing stops as part of this service because you never want to enter into a position in one of these stocks and not know what you're going to do with it. And you know, I'm comfortable with watching some of these. Obviously, I'm not going to freak out if they have a down day. As many of you know, I did work with Bill O'Neill for many years over at Investors Business Daily, and one of the funniest things that he just said one day, he said, well, they're not going to go up every day. And the way he said it was just so funny. It was almost just in that exact inflection. And it was pretty funny, and that's exactly right. So, you know, if you have some kind of modest pullback in the market or a modest pullback in your stock, both percentage-wise and volume-wise. You know, particularly we have one that we're holding right now that has risen about 13%. Well, you know, not unusual to see a couple days of maybe a little bit of a pullback when you have some investors and traders that want to go ahead and take some profits. So not unusual to see that at all. So I put a chart up there of a company that you don't hear a whole lot about. It's called Blythe. BTH is the ticker on this one. Now, this is a very small company. Market cap $749 million. Doesn't really meet my volume parameters. It only trades about 179,000 shares a day. And this is an interesting company. They make candles, home fragrances, home decor. You know, this is another one of those. It's not one of these sort of media darlings that you're going to hear a whole lot about. So this was, though, at times several years ago, was a leading small company. But the reason you're seeing that big move today, it gapped up. It's reversing, kind of selling off after some of those gains. It's a long way from closing that gap, but it is selling off a little bit after an early gap up today. Now, here's what's happening in the news on this company. Blythe is actually, amidst all these candles and home decor items, they also own a company called ViSalus, which is a provider. They make weight management, nutritional supplements, energy drinks. So that company, ViSalus, is being carved out, spun off of this company. It filed to raise $175 million in an IPO. And ViSalus, let's see, it was founded in 2005, had a $498 million in sales for the 12 months ended June 30th. This is owned by Blythe. Jefferies is going to be the underwriter. So far, Jefferies is the only underwriter on this. So no word about pricing, no word about the ticker on ViSalus, no word about what exchange this might be listed on. But that's what's happening there on Blythe today. So let me just talk about Blythe here for another minute. This is one that I've watched kind of on and off over the years, but it definitely is one of these speculative names. I'm just going to take a look here. So you've had some pretty good earnings growth recently. It had a huge earnings decline way back in 2009, but that's ancient history by now. Wall Street sees a 25% decline to $1.45 per share in 2012 on this one. I know they just made some announcement about their dividend. But in any case, that's what's happening there on Blythe. You've got the ViSalus IPO coming up. And, you know, with the supplement sector doing very well right now, you know, this could be a very smart move for the company to carve out that thing and capture some value that's been locked up in this home decor stock. Give me a call, 877-927-6648. I'm Kate Stalter. This is the Small Cap Roundup.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Okay, as always, in this time of the show, we just had our European close, had some of these major indexes closing higher. We've got U.S. trade to the upside. You know, a lot of chatter out there in the financial media today. There's apparently data to back up what would have been obvious to anybody who had been tracking some of this, although, you know, I don't track volume on the global exchanges. That's not something that I tend to look at, and probably most traders and investors in the U.S. don't. But exchanges around the world have issued some data today showing that August volume on a year-over-year basis is lower. So you kind of can't get away with the excuse of saying, well, it's August, everybody's on vacation. No, we're comparing it to a year ago, and volume is even lower on that basis. So, you know, who knows? You can attribute a number of reasons, distrust of the market, but that's the retail trader. And as we all know, it's not the retail trader who drives global volume. It is the institutions. So that whole kind of distrust thing doesn't necessarily factor in. It's probably more of just the uncertainty. You know, the election year in the U.S. does factor into global trade, of course. So you probably have a few different things going on. So back to some of the more granular discussion here on individual stocks. I put up a chart there on Tiger TV for RealPage. RP is the ticker. Now, this is kind of an interesting company. I've got it there on a daily chart for you. Let me put that on a weekly, and you'll get a sense of kind of where it's been, why it's only recently started to show up on my screens. And if you're not familiar with how I screen for stocks, I'm looking for strength. I'm not looking to buy on weakness, not trying to catch that proverbial falling knife, trying to make a bet that a stock has bottomed out. I'm really looking for signs of strength. And, of course, you want to catch these things early, okay? I'm not necessarily always a believer in a lot of traders like to look for something that is literally at a new 52-week high. I'm not necessarily in every case going to be doing that because you have a lot of these stocks that their trading pattern tends to be such that when they rally to a new high, they roll over, probably reach a higher low. So they're going to be trending higher in fits and starts, in other words. So I'm looking at this one, RealPage. This one has popped up on some of my scans. I was looking at this one yesterday. Now, this one, this is kind of an oddball. It went public in August of 2010, so it is very new, 2 years old. That's still new, almost exactly 2 years old, in fact. It went public at $11 per share, and then you can kind of see back here in the autumn there of 2010, big rally. Then, of course, you had that big, we all remember this, what happened a year ago, August 2011, the decline right in here. Now then, you had this huge decline back in February of this year. I don't have all the company and fundamental data right here in front of me. That looks like something company specific. What happened right here? Something maybe in an earnings report or some kind of news that happened right here. Correction. Now, lately, of course, you do see some renewed technical strength in RealPage. Seeing some pretty decent indicators when it comes to some of the volume trends. Some heavier volume in some recent weeks. Kind of liking what I'm seeing here. Now, this is interesting. You've got some tight trade right in here in 1 week anyway. It's not, as the saying goes, one data point does not make a trend. But it's interesting nonetheless, just something to kind of keep an eye on, that you do have a so far, weekly price action that's pretty consistent with last week's close. Yeah, we're up about 0.1%. So that's all you have right there in that particular case. So pretty interesting what we're seeing going on with this company. Analysts expecting double-digit earnings growth in the next couple of years. That's nice to see. Very solid revenue growth. I should mention what this company does and perhaps why it's rallying a bit right now. This is related to the real estate sector, okay? So we're back to that. We have a case where this is a company that provides software, screening software, accounting software, leasing, kind of back office kind of software. It's actually in the rental industry, so take that with somewhat of a grain of salt. I know rentals have been big in the last few years, and of course, as housing starts to improve, interest rates start to show signs of rising, at least when it comes to mortgages. You do see the analysts out there kind of poo-pooing the potential future for the rental industry, saying, well, if the landlords are paying higher interest rates on their mortgage, they're going to pass that along to their tenants. Rental rates will go up. On the other hand, you see other analysts who are out there talking about, well, we're seeing this building boom. More people are going to be buying. That's going to hurt the rental market. You hear the analysts on both sides of this. But nonetheless, that's what RealPage does. Market cap a little bit shy of $1.9 billion. Falls into our small cap purview. moves about 385,000 shares a day, so not bad liquidity. This could be one to watch. Let me just take a look here. I want to talk a little bit about on this one just where it's at relative to some of the key moving averages. In my view, right now, this is a little bit extended above that 5-day moving average. It's kind of been trading above that line a little bit too long. You might want to see some pullback to that 5-day, a little bit below that 5-day exponential line. This is about 5% above its 15-day line right now. So it would have to pull back considerably, or kind of both. You'd have to see a fairly large pullback and that 15-day line move higher. So that could be also some kind of area of support you might want to be looking at here. So in other words, this one could be something that you might consider as some kind of potential buy candidate in the not-so-distant future. It's not really something I would be looking at today, though. So I just want to kind of go over some more of my small cap screens. Let me show you one that we had featured this one in the Low Price Leaders newsletter for quite some time as a watch candidate. And let's see here. This is www.web.com. So I've got that for you there on a weekly chart. You see that it did rally to some new highs not too long ago. Small company, market cap $849 million. And let me see here. Trading volume has actually risen. You've seen a spike in volume ever since May. You saw volume really start to rise. If you look carefully there on Tiger TV, I'll show you that right there. You can see that there on the volume lines, how we did see volume begin to rise noticeably as of May of this year. You had a big pullback. Let me go over to a daily chart and show you this. This thing really did break down. In fact, we had taken it off the watch list prior to this breakdown, just based on some of the other technical signals here. You did see support above the 200-day moving average, so that's a good sign. So you did see where some of the institutions who are holding this, of course, the small cap mutual funds, you did see where they stepped in to support this above that price line, and it's now trading, let's see here, let me see where this is, a little bit below that 50-day line. It's about 2.4% right now below the 50-day line. You know, I would not write this one off completely, but clearly it's not something that I would be looking at as a buy candidate right now. This one, let's see here. You've got the 50-day line is above the 5-day exponential and the 15-day exponential. So obviously you would want to see those shorter-term moving averages be higher than the 50-day. So right now you don't want to be getting in on this one. You've got a bad moving average inversion right there that you really don't want to be seeing. Fundamentally, though, there is a case for this. And this, by the way, web.com, as the name might suggest, it provides website services to small businesses. You've got some of those hosting services, other content management, publishing services, a lot of the stuff that a small or medium-sized business can outsource that you don't necessarily want to hire your own IT guy in-house to be handling some of this if you're a small company or even a business you're running from home. So you can outsource some of that to a company called web.com. Remember last month the dirty word of the day was outsourcing? That's gone away. I'm not sure what the dirty word of today is, but it was outsourcing. And I think with some politicians misunderstanding what the word means, no kidding. It doesn't always mean you're shipping all your business over to China. What it could mean is that you are an American company sending your business to an American contractor or another American small business who does your work for you. And in many, many, many senses, outsourcing is a terrific word, terrific concept, because it does provide jobs. Hello. All right. So there we go. Yeah, see, it's not not hard to get me on one of those little mini rants, and it's not hard probably either to read between the lines of what I might be saying there. So we've got web.com. I'm not going to write this one off. I do like the fundamental potential we're seeing on this one, to the point of the outsourcing. You are seeing that trend. So we're seeing analysts expecting 48% earnings growth this fiscal year to $1.54 per share. That's over $1.04 in 2011. More growth anticipated, 25% to $1.93 in 2013. Makes a lot of sense, just for the reasons I talked about, where you are seeing small businesses that don't want to be having all these capabilities necessarily in-house. They'd rather send these out, and that can impact a lot of other businesses. Let's move on here. Let's look at IPXL is another small cap name that popped up onto my screens. Let me move this over here onto a weekly chart for you. Impax Laboratories. So this is based in Northern California, and this company makes generic and branded pharmaceuticals. We have seen, actually, let's just go back to an S&P briefly. I'm going to detour here to an S&P 500 pharmaceutical maker that I know was one of the S&P's decliners today. This is Perrigo, PRGO. You can see it's holding up there above the 200-day. So, obviously one of these, if you're a trader and you own it, you get shaken out. It can be fairly damaging, okay? But if you're a longer-term investor and you're looking at some of those longer trend lines there, not so devastating necessarily. If it holds at these levels, you are still seeing higher lows in the current consolidation. So let me go back then to another smaller generic pharmaceutical that we were just looking at, IPXL, Impax Laboratories. Market cap, $1.6 billion. Not bad liquidity, moves 547,000 shares a day on average. Analysts see earnings doubling this fiscal year to $2.05 a share, and then only growing very, very slightly in 2013 to $2.10 a share. Now, this is pretty erratic, and you can see that sometimes in some of these smaller medical names. Had big earnings growth in 2010 and then a big earnings decline in 2011. I want to state it remained profitable in 2011, earning 97 cents a share. However, that was a pretty big decline from, wait for it, $2.85 in 2010. So you do see a little bit of erratic growth, but we are seeing some expected growth in this one here. Right now it's consolidating below these previous highs over here, and of course with some of these drug makers, it just depends on the deals, depends on the news, depends on what's happening at some of the insurance companies, depends what's happening overseas. So you've got a lot of variables that can affect these guys. But this is just an interesting one that popped up on my screens this morning that I wanted to look at. Hey, we've got one more segment today. Got time for a call, 877-927-6648. Be right back with the Small Cap Roundup.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right. Welcome in. Last segment of today's Small Cap Roundup. We've got our indexes on the rise. Just checking out where we are seeing this S&P 500 because, of course, could be getting pretty near to some resistance. And I believe I just saw a little bit of a pullback right then, just a slight pullback. So, yeah, we're getting up near some potential resistance right now. So that'll be very interesting to see if the rally just fades away. Okay, so I put up a chart there. Actually, before I talk about EBIX, just taking a look here at today's IPO, High Crush, HCLP. Why not? Let's create some media hype right here. Made its debut at 17, now trading at about 1832, so just shy of 1832. So good, looking nice little debut there for High Crush. But of course, as you can imagine, a lot of that is institutional propping up shares that's going on the opening day, not uncommon. So we have up there a chart of EBIX. Now, this is one that I've watched off and on, As you can see pretty clearly there on the chart, as I just mentioned, I am looking at stocks to buy into strength, and you can see why this has fallen on and off my scans pretty easily. Strength, weakness, back to strength. So we're back in strength mode right now, and if we are looking at this on a daily chart, so there you go, you can see pretty good trading relative to that 50-day moving average. You had that bullish moving average crossover that we did see back here not too long ago. There you have it. Actually, no. What do we have here? No, you did have actually a negative moving average crossover, so you're still looking for the bullish moving average crossover. I use so many different charting programs. Sometimes it's hard for me to remember which color signifies which line in which one. So on here, you've got the 50-day is the blue line. If you are watching on Tiger TV, you've got the 200-day is the red line. You might be seeing a very bullish moving average crossover in the coming sessions, and that could potentially be something that you'd want to consider as a buy opportunity. Okay, so I like the prospects for this one. However, the fundamental case not as strong as what we just looked at before the break. You're only seeing single-digit earnings growth expected in 2012 and 2013 for EBIX. This is a company that specializes in software for the insurance business. And, a lot of times these very specialized product niches can become something that can be very lucrative businesses. And, I'm not necessarily looking at any kind of traditional chart patterns on some of these. This is one that, again, it's kind of one of these names that when it's rallied to some new highs, it kind of tends to roll over recently. In prior years, it didn't do that. In prior years, it rallied to new highs and kept rallying. I want to see this short-term over the longer-term moving average crossover. That could be something pretty interesting to see here. And then we might go on and see if maybe there are some of those more traditional chart patterns that might get some of the other styles of investors coming in here. Now, one thing to point out, too, I got a few seconds here back on the weekly chart. Let me just finish this thought here. You do have a situation where you're still below the prior high over here, which also argues against some traditional, say, cup and handle patterns. Okay, that's a wrap for today's show. Thank you so much for listening. Check out the Low Price Leaders newsletter on TFNN.com, still at the introductory rate. I will talk to you again on Tuesday. Have a great weekend.